Hello, everybody, and welcome to this week's podcast for the week of November 12th, 2025. Hope everyone is doing well. My name is Miles Clark. I'm joined by good friend and colleague David Clark. How you doing?
I'm good. I'm good. I'm happy to be in the office. Although I did appear to bring cold weather with me. It was snowing in my hometown when I left, and it's just frigid here now. Of
Yeah,
course, I mean, the rest of the East Coast might be too,
20,
but
but last weekend it was like 70 in Richmond, and now it's 20, and then this weekend I think it's going to be like 50 or 60 degrees. So who knows really what weather we're getting. I will tell you, we are right in obviously in that middle sweet spot between Christmas, not Christmas yet, Thanksgiving and Halloween. And a couple of guys in the office brought in some candy. So I am snacking on Swedish fish as we go through. I'll try not to make anyone too jealous with candy. But point being, we got a lot of great stuff to go through as we kind of talk through today. Markets, of course, just continuing to really chug along for the most part. Risk on areas of the market really just continuing to move forward. Market's kind of consolidating a little bit around all-time highs, but for the most part, really just more what we've seen in 2025 so far, right?
yeah. And I mean, in part of that, I think the story is, like you said, market's continuing higher, but it's sort of shrugging off what many would think would be all these little inflections points to potentially cause further uncertainty. It sort of seems like folks are almost comfortable now with what uncertainty is there, to the level that uncertainty has almost become certainty that it is uncertainty, if that
Right.
makes sense. Like, we just know it's available and present. And I think most people are just saying at this point, let's just continue to roll with what is. Let's
Right.
not fight what's happening. Let's just continue to plod forward until we get some definitive change in direction, which, we really haven't seen just yet.
Right. Well, and talk about uncertainty, right? I think there's been some progress on the government shutdown front,
Hmm.
right? Over the last 1 week. Now, of course, who knows, right? There could be a bombshell that could happen as
Yeah,
we're
by the
speaking,
time this comes out, it
right?
could be totally changed.
But point is that, like you said, markets seem to be okay. And here's the thing, markets also can't go up every day. We would prefer them to go up more than they go down. But point is that if you do see a little bit of not confusing price movement, but if you just see some back and forth movement, that's part of a healthy market environment, right? It's not healthy for markets to just go straight up
Well, and that's what I
every
was
single
going to
day.
say.
Yeah.
We've come off this rally that began in February, or not February, April, pardon me,
Yep.
and ultimately sustained through much of the summer. We got a little bit of a pullback sort of coming into the back end of summer, early fall, but then resumption on forward.
Right.
And at this point, it's, like we've talked about, there's that little bit of uncertainty, but there's enough at least suggesting that you sort of just continue with what is.
Right.
Um,
But on to the fun stuff, the most important stuff. David, maybe you and I don't do this because we love P&F, but we'll have loaded question on calls with clients. Have you ever heard anyone say, "Do you all do anything other than point and figure?" Right?
Many times.
Many times, and many times up until recently, we've had to say, unfortunately, we just do P&F, right? We're somewhat well versed in the rest of the fundamentals and the
And we can
technicals.
have a conversation with you about that.
Exactly. But we
But
stay in our lane with the PNFs. No longer necessarily. We're still going to specialize. Obviously, that's the 9 out of 10, 99 times out of 100, we're still going to be focusing on PNF. But
mhm.
with the most recent release that we just put out, we brought some additional chart types to the page. So whether you are a foundation user or you're a kind of a heavy user that utilizes the model builder, whatever, the whole 9 yards of the platform, there are some other chart types now that maybe you can show and talk about with your clients.
Mhm.
My personal favorite, maybe you've got one, but we've got line charts on there so we can actually see that line over time. We have line RS charts. So again, taking away some of the X's and O's and really just putting it in a different format on your screen.
Yeah, and then candlesticks is another
Exactly.
option. And
Yeah.
a lot of this I feel like came from the genesis of, yes, people were thinking, do you guys do anything other than point and figure? Which more often than not, we live and breathe by point and
Right.
figure. But then from there, I think it was one of those things that you might have one terminal open here or one screen here that has certain charts. This one has different, and you've got point and figure here. You now have a one-stop shop that you can get various pricing charts. And that's sort of the end goal, is that you now don't have to jump back and forth between all these different platforms or over here to this screen to
Right.
that one. You can just roll through the charts as they go. Whether you want to see a candlestick or a point and figure, they remain dear and near and dear to our hearts and are always our main focus. but this is definitely a option for people to take advantage of.
Exactly. And we won't, this is not a sales thing or anything like that. The point is that you all can play around with it. It's about saving you time, right? So just like you
Mhm.
said, David, you don't have to go to another platform anymore just for the same type of technical view that you'll be able to get with a candlestick. We got those available, so feel free to check them out. But again, I do want to emphasize most, if not all of our research is still going to be P&F focused.
Right,
Um,
right. So anything you read as far as like when we're going to write it, any of the indicators we're going to talk about, whatever it's going to be talked about, it's going to be point and figure methodology focused and centered all around that and how we educate people into utilizing that along with other forms of analysis. That's a lot of what we preach.
cool. Well, from here, do you want to go stock stuff? I know we got some indicator stuff that you want to talk about. Where do you want to go?
Well, let's dive into stocks first, and then we
Okay.
can, because it'll be two sort of, I think, individual names that have their own conversation
Right.
going on, and then we can dive into
Okay.
sort of the broader market piece. And I mean, I think one thing that maybe has gotten folks' attention, upcoming this week is going to be Disney earnings.
Right.
This has been sort of an interesting chart, especially over the last, 3 or 4 months. You saw a really furious rally off of those April lows, pretty tremendous technical improvement, really kind of up to a level of resistance there, and have seen some consolidation since. Technically moved back to a sell signal in October, but have seen a reversal today, just before seeing earnings out. But Disney has also been in the headlines quite a few times over the weekend for a lot of various reasons. So this is, along with it reporting earnings, has definitely gotten some eyes on it.
I know my wonderful fiance, I don't think she makes it this far into the podcast. So if she's still here, hey Gabby. But point is that she was, like, where am I going to watch Dancing with the Stars now? It's not on YouTube TV,
Right.
right? Or, ESPN. We can't watch college football as easy now or anything like that. I think that's most near and dear to my heart. But yeah, they're definitely in the headlines. We'll be very curious. Again, we're not fundamentalists, so we're not necessarily digging through the earnings call, but that's definitely going to be something that markets are watching,
We
right?
might be listening to see where we're going to watch ESPN though.
Well,
You
that's true. Well,
know?
and where are we going to listen to the earnings call? Are we going to be able to listen to it on YouTube TV this year?
Wouldn't it
Yeah.
be poetic irony?
Something like that. But actually talking about the technical picture, Disney has been something I cover the comm services sector have for, going on what, 3 years since I started. But point is that this has been a stock that has fooled me. Not one, not two, not three, many times, right? Because you get these big stems up, you get these positive trend breaks, you get it overextended towards the upside, just kind of like where we are right now on a big stem, and then ultimately you kind of fall back into place. So all that to say, it's a strong technical stock, but just keep it in mind, right? What we are is
Mhm.
we look at patterns, and there's a couple of, obvious patterns that we see when we get extended like this for Disney.
I think when the interesting thing is when you sort of expand out, and as I was moving the chart around there, it sort of struck me that it's been in a consolidation phase, really a long-term consolidation phase for going on now 3 years.
Yep.
So I mean, any significant break above that mid 120 range is going to be notable for its long-term picture moving forward. If we were to see that, further rejection from there to the downside, this is more almost like your covered call play.
Right.
If it's something that you still own, it's still just kind of bouncing around, and
Right.
it's more what we would look for along those lines. But Disney's definitely one we wanted to look at, but Google is the other chart that we were sort of going back and forth here, talking about some comms names. I believe Google, when did they report? Have they already
Well, yeah,
reported?
they were part of the Mag 7 last week
Yep.
or whatever. They had strong results, it seemed, if my memory suits me correctly. And obviously, if they didn't, strong technical picture still. They're a 5 for 5er by Dorsey Wright standards. That's the best it can get. Starting off in 2025, it was one where we were lagging behind. We were looking at other areas of the Magnificent Seven and saying, Google's not doing well. It's not holding its weight. And then suddenly, right, it just kind of took off like a rocket ship. And it's certainly had a nice little run of it. Now we are, unlike other areas of the Magnificent Seven, we are towards the top of that trading band, right? So we're a bit extended here, not crazy by any stretch of the word, but we are a bit extended.
Especially compared to what we've seen some assets get to here recently.
Exactly.
Gold, we're calling you out.
Yeah. But point is that Google, has been, or Alphabet, I guess you'll say, Google has been a strong asset. It's been a leader within the group. And overall, nice support nearby. I can't see exactly where that is.
276.
276, but you got nice support offer just around current levels and kind of go from there.
Yeah, and well, we switch our conversation from, looking at just those two individual names because they were in a lot of the news this week.
Yep.
So we figured some people might get questions about, or their clients might ask them about Disney or what do they
Yeah,
think
buy
of
what you know,
Google,
right? Yeah.
buy what you know type of thing. But we offer our technical perspective here and also just sort of that additional light that we can shed on it. But we do want to switch things up, at least change gears a little bit and talk about sort of a broader, higher level view, not just looking at individual names. Because while we see, indices sitting at least near still their highs, we have seen indicators present a very different, not a very different, but a different picture for
Right.
sure. Um, One that at least has given us the indication that we're maybe not seeing as many upside participants as we once were,
Right.
especially even a month ago, I think at this point, or even 2 months ago, depending on which indicator you're looking at. But one of the ones that we continue to follow, bullish percents being one of our hallmarks, measuring those stocks that are on the percentage of stocks on point and figure buy signals. But over this past week, we not only saw the bullish percent for the NYSE reverse down, we also saw the bullish percent for the S&P 500 move below 50%. So really at this point, simply suggesting that there are more stocks on sell signals than on buy signals right now.
Yeah.
So we're seeing that slight decrease in participation, and that's not been, I would say, abrupt. It's been pretty steady since we sort of got that initial move down in August, but we've seen a lot of these indicators sort of continue to work their way down. Again, all while the market sort of continues to remain near highs.
Yeah, I've got 2 points there. The first is there's nothing particularly special about the 50% mark, right? That's
No,
just a
it is
conversational.
simply just that
Yeah,
conversation piece of majority or are on buy signals or they're not.
right. And the other point I think is important to make is our good friend and colleague who's no longer with the firm, but Will Gibson. One
Mhm.
thing he used to say to me all the time was, I would kind of question it. And I would say, well, yeah, but the market is still moving up, but the indicators are moving down. What does that mean? Is that bad? He said, well, Miles, participation does not always equal performance. And I've kind of said that a bunch of times. I kind of took that to heart. What this means is essentially it's just markets moving higher at the hands of fewer and fewer stocks, right?
Which just feels like a theme we've beaten like a dead horse for
Correct. Yes,
years.
exactly. Well, that's what it's been really. But point is that isn't, I think you and I can both sit here and say that isn't the best thing, but it's certainly far from a bad thing. Let's put it that way, right? All throughout
Right.
23, throughout 24, we broadened out a bit in 24. But point is that we have seen, participation lower, but markets still do really well. So this decrease in participation does not spell the end of this bull market, I think is what I'm trying to say.
Exactly. And it's sort of serving that context that you need to. One of the things I also like to tell people is when you're looking at these type of indicators, you have to think sort of what side of this indicator am I on?
Yep.
If I still have stocks on buy signals, you're doing all right. There's not really much action for you to take right now.
Right.
Are you maybe approaching it to the extent that you're evaluating where your support's at? Probably. But that's a different conversation or a different school of thought to have versus somebody who's seen stocks within their portfolios give consecutive sell signals, violate multiple levels of support. So those are things that you would look to address. Those would be the conversations you'd be looking to have with clients of, hey, market's still moving to new highs, but we've got one that's really kind of hampering us
Right.
right now.
Yep.
And
You
and
move out of that, go find another 5 for 5er that's on a buy signal.
and this is
Yeah.
this is the hallmark of really what we do.
Pulling the weeds.
Weeding out the losers, pull them out. Whenever they begin to turn on you, let some rifle something back in, and look for us to capture a better trend.
Yeah, and I'll mention this. I don't want anyone on the listening to this to think that you and I just have on rose-colored glasses, right? We look at that chart, it is evident that we are still well off of highs. This is something that we need to watch as we move into December, move
Well, and
into
that means high marks
2026.
for these indicators.
Oh,
Just
yes.
to clarify.
Yeah, high marks for the indicators. Sorry. Yeah, we're moving off of those kind of high indicator marks. That again, is something that we want to watch and prioritize as we move into December and into 2026. We're certainly not saying, oh, it doesn't matter, right? It does matter. It's just, hey, there are other signals that are still green that perhaps mean more,
Well,
right?
and this is part of where one of the things we're getting at is you could even see some of these indicators move even lower than where they're currently at. But in many cases, domestic equities would probably still be our number one asset class.
Like the core is still ranked
They're
so
still going to
strong.
be
Yeah,
ranked really strong. So rather than, yeah, obviously you might view it as a period of, downside that's you're going to be worried about. But conversely to that, I think when you're looking in the confines of a bull market and you see indicators at least move down to lower levels, the opposite side of the coin is there's opportunity that is about to be afoot,
right.
in the future there. So when you're seeing these indicators move lower, yeah, you may be evaluating some of those and kicking some of those losers out, but take a minute and look and say, what could I then take an opportunity when we begin to see the market move higher?
Right.
When these indicators begin to change, where could I look to take an opportunity?
Yeah.
So I think while a lot of people may think we're being kind of bit of not quite total doom and gloom, but a little bit gray
Yeah.
right now, it is you do have to bear in mind that even with some of these downsides, there you can see in the future there's going to be potential opportunity as well to
Yeah.
look at it. Um,
Well, I'll tell you, not to cut you off. We
no,
got two more topics, one adjacent to this, and then one kind of final point on the international deal. Why don't you move us over to there? Tell us what you're seeing from, because I know you love all these kind of not in random indicators, but you're always
oh
my
no, they're in
go-to
the
guy.
weeds.
You're always, I'm like, what is David looking at? What indicator is he looking at that I'm
if
not? And
if
then you have
there's
you
a
got one.
long-winded symbol indicator, I've got it in the back of my head, and I can try to explain to you what it does.
Let's hear it.
This one is not one of those super
Yeah.
long symbol one, but we were talking about participation just through the bullish percent. This is another one of those kind of quasi participation indicators, but in this case, a relative one, looking at the percentage of stocks with relative outperformance versus the market. In this case, in the near term, the indicator being the RS and X's indicator. The one will pop up on the screen for you there is going to be the RSX for SPX, going to be the RSX and RS and X's for S&P 500 stocks. While it still maintains a column of X's currently, we've seen that value decrease. So again, while we've seen stocks move to sell signals, we're now seeing some of that relative story where stocks are beginning to underperform the broader market. And again, this is one of those things to say if you have a position that is reversed down on its market RS chart, also given sell signals or violated support, those are the ones that the indicators are trying to point you towards to call to action or
Right.
potentially look for something. Um, and this is just one that's not reversed down yet, but it's one that's close to. And I think it's key to bear in mind that we're starting to see some of that relative picture wane as well.
Yeah, I'll keep my points on this quick. I've got two very quick ones. The first one is that, or well, the first one is that this doesn't move around that frequently,
Right.
right?
And it never it's rare for it to even get above the 60% level.
Right.
So it tends to operate between kind of mid 50s and mid 30s levels.
Yeah.
Anywhere in kind of that 40% range is kind of average for
Right.
it. So it behaves a little bit slower and a little bit differently than some of the indicators, but like we've been talking about, it gives you a sort of that better total picture and
Right.
understanding
Where
what
are
you
we
may
at right
need to
now,
look
by the
at.
way? On
RSX,
no, I know
RSX, XPX.
what's the value?
Currently at 48%
Right.
still.
Okay, and that was leading to my second point, which was essentially if this value falls, right, you can think it's more of a core, like the larger name dominated market, right?
Mhm.
Versus if this value
Or at least
grows, more
fewer
expensive,
name
fewer names,
dominated.
right?
Right.
Versus if this value grows, it's more of a hey, throw a dart at a dartboard type of market environment.
Yeah.
There's a lot more
Sort of a
stocks doing
rising
that.
tides bringing all boats. Yeah.
Exactly. So again, that's maybe my 2 points on it. Again, just keep an eye on a reversal for this. But with that said, we can jump over into our last kind
Last
of
point.
topic, that being international equities. We focus a lot on the domestic side of things, of course, most often, but on the international side of things, still a really, really strong start and middle and now end to 2025, particularly as we've moved into the last quarter on the emerging front, right? China's perked up, Latin America has perked up quite nicely, a lot of emerging markets in there. So again, both of those groups growing strongly as we move into 2020, 2020, 2026.
Well, and we've seen at least a little bit of shake up for in Dolly, those international rankings, to your point of Latin America really kind of outpacing some of those international assets. But even then, it's only just kind of bringing more options to the table that you
Right.
can select for international equity exposure. Because I was looking at a list earlier, especially among country ETFs, there's quite a few number of them that are scoring well above five. I
Right.
mean, so and developed emerging market, it's a variety of them for sure. But we've definitely started to get the questions of, well, once we see these types of scores, then what?
Yeah.
And
Yeah, and on what we can do to kind of look at that is we'll use a broader asset allocation tool, something like the asset class group scores page,
mm,
which takes average scores for 134 different groups. In this case, we can focus on all emerging and all developed kind of international markets. We've taken a look and again throwing up some performance metrics on the screen of when both of those groups moved up above 4.0, or on average, these groups are now strong by Dorsey Wright standards
mm,
across the board. Only happens a handful of times in history, right? It's been a very domestic dominated
well,
markets.
caveat being some of this history only goes back 20 plus years.
That is fair. Yeah, exactly. You don't get too much in there. But point is, you're not getting strong international markets really throughout the last, 25, 30 years or so. Sans maybe a couple of points. I
Mm,
digress. Most of the time, on average, if you look at the averages, over the next 6 months to a year, this has typically been a bit of a kind of a topping point, right? On average, with the caveat that, of course, there's some pretty big negative averages in there, bringing those down, right?
mm.
So point is that, it's kind of put up or shut up time. There's some big instances, great financial crisis in there, bringing some of the averages down.
Mm.
But, in general, it's important to kind of see what things go, right?
Well, and as you'll see in the table, as we put it up, you're seeing sort of mid to back half 2000s being for most of these
Right.
dates, which was just kind of a volatile period for equities, period.
Correct. Yeah, that's a good point.
No matter whether you were domestic or international. So do you say it deserves a full asterisk? No, but it at least deserves the context.
Right. Oh yeah.
And I mean, I think at this point too, it has been 15 plus almost 20 years since we've seen this type of strength out of international equities. And I think one of the interesting pieces that we talk about with domestic a lot is no two domestic environments or bullish markets are going to be the same.
Right.
And I think that's holds true here. We're dealing with a different international sort of outlook and what's going on geopolitically than we were 20 years ago.
Very correct.
So I mean, that's not to call it one way or another, mostly just to say don't, fully take one table for all right, international equities are topping out and we're getting ready to see it move south.
Correct.
In all honesty, what we're likely more to probably see is just periods of consolidations while assets fight out who's going to be the next leader.
Correct.
That's really what sort of that next phase may look like. But even then, no one knows when it's coming.
Right. And these historical averages are just that, right? History does not repeat, but it often does rhyme. But obviously you can get the two, well, I don't know where I'm going with the rhyme and a rhyme. I was gonna make a joke that two
Well,
rhymes can sound very different, but never mind.
Well, point being, as we've talked about, there's some outliers here that
Yeah.
sort of skew the data to make it that more muted look.
Yeah.
But there are environments where you did see
Yeah. Yeah.
international continue to march higher, even doing these. Caveat is we also saw a few environments where they moved lower.
So basically what I'm saying is it could go either
It
way.
could go either way.
And to find out which way it's gonna go, join us on next week's podcast. It's obviously as we wrap up, it was a lot of fun here today. I hope you all learned something. Of course, if you have any questions, always feel free to shoot us an email, call into the office. We're always happy to help. Otherwise, David, it was an absolute pleasure sitting next to you today, and we'll see you
Always
next
glad to
time.
be on.
See ya.